Deven Choksey, Managing Director of Choksey Securities, joins us. Deven, good morning and thank you for joining us. Deven, the big story today has to be Tata Motors. Okay, numbers are a beat on all counts. How do you see the stock reacting in the run up to the numbers? Tata Motors has been a big underperformer. Post these numbers, where do you think the stock could move now?
Well, I think most importantly, I think in the numbers, I think what one has seen is the realization which has improved very significantly, both on a quarter-over-quarter basis as well as on a year-over-year basis. And that validates the point which we have been making up till now, that the new model launches in the JLR portfolio is going to drive the better numbers and the margins also for the company. I think looking at 2014 calendar, you find that I think new models are also coming up from this particular stable of JLR. You are likely to see the kind of a sustenance of this margin, and given that situation, to my mind, I think the stock would hold the potential to go up to 385 to 410 trading range. So obviously I think one would trade probably in this particular counter between 385 410 with a 1-year price target of 440 or 450.
Deven, what's the sense that you're getting about the telecom basket? Because we completely saw, it getting clobbered down in trade yesterday. More pain and a complete avoid at that?
We have been maintaining, Aisha, on this particular front, the avoid kind of a recommendation for most of the telcos. As I was making a point even up till now, in many of the telcos, I think, who are bidding aggressively for the spectrum auction which is going on right now, they are likely to see the delay in the payback period that they are investing money for, and that's not going to be healthy for these companies. Yes, I think the silver lining out here could be that consolidation would help them bring the pricing power back, and to an extent ARPU would come back to a level at which I think they may be feeling a little bit more happy. So that would be a silver lining, but beyond that I think there is nothing much. I think most of the telcos are quoting at an adequately high level of valuation with I think very poor return on capital employed. So to a greater extent I think I would think that one would probably stay away from the voice telephony segment of the business and probably I think look around elsewhere for making money in the market.
Which is the biggest loser on the Nifty this year? It's JP Associates, 28% down. They came out with numbers and very poor set of numbers. Execution is a problem, interest burden is a big issue, demand is not there, construction business is not going anywhere, and cement, I guess, is the only silver lining. Deven, what is the way forward for JP Associates? A quarter ago it appeared that they were doing all the right things, they were on course to reduce their debt, but the Q3 numbers are telling us that the business is nowhere close to its bottom.
Well, Nikunj, I think in general, the GDP growth will have to improve for some of these companies to probably, I think, start showing better performance. The kind of financial stress that one is seeing in the balance sheets of this company, I think is largely due to, I think, unfavorable condition, and because of which I think they are unable to carry out the financial re-engineering which I think we generally talk about in kind of stress balance sheets of the companies. I think that's where this company is trouble. To my mind, I think only escape to this company would be in form of the higher amount of GDP growth coming back into economy, activities start resuming, and I think the company may find soon, I think, some kind of re-engineering possibilities. Till that point of time, I think one will have to pass through these pains as I see it.
So you will not be a buyer in JP Associates, even though the stock is at 40 rupees, it is nearing its all-time low.
Certainly, Nikunj. I think when the clarity is not emerging, I think you would be buying and you will be frustrating yourself, keeping the stock in the portfolio. Rather than that, I think keeping the money available for, I think, some of the better opportunities in the markets. I think that would be the better strategy.
Deven, is DLF making sense post the Aman Resorts deal, or is it still an avoid?
Well, I think they have been carrying out the financial re-engineering process as we talked about in earlier company. I think this company DLF is carrying out this particular process and it has been taking longer period of time. Of course, I think the Aman Resort sale I think would probably bring the liquidity into the balance sheet, but still I wouldn't be very comfortable with the kind of a balance sheet per se. Largely also because I think this company has probably shown the character of going with the asset heavy model in the business. And somewhere in real estate, I believe there are things likes of Godrej Properties, or for that matter Oberoi Realty or Mahindra Lifespace kind of business model, which are asset light model. They are, I think, far better compared to the ones, I think, who are carrying the land bank in the books. So to a greater extent, I think would stay away from those companies which are land bank dependent, and then in turn creating the stress in the balance sheet. So certainly avoid for DLF as well.
Deven, come in on Sun Pharma. That stock is moving from strength to strength. It was a great 2012 for Sun Pharma. It was a super 2013 for Sun Pharma, and it's turning out to be another another good year for that counter.
Yes, Nikunj, for sure. I think yesterday's Taro's performance, I think, which contributes about 40% plus to Sun Pharma's overall balance sheet, I think has been also quite good, I think, and impressive. The way in which I think they probably, I think, brought out the value of Taro in a shorter period of time, I think that convinces you that yes, going forward, the inorganic growth strategy which Sun Pharma wants to follow further and further, I think would probably build better results. The way in which I think they have already started asking for, I think, the money to be kept aside for growth acquisition, according to me, I think that gives you that kind of a confidence that inorganic growth is in offing. It's likely to come up in this financial year or maybe a little later. So I think from that perspective, the growth would continue to be driving the Sun Pharma, and that's where I think the premium valuation is. To an extent, I think one would remain a little uncomfortable with the premium valuation, but certainly market gives opportunity, and I think in a falling market, it becomes a good buy opportunity. So I would remain bullish on the counter and probably consider buying in forms.